To another episode of the AJ Brown Show.
Ouch.
My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Happy New Year, AJ.
Happy New Year. Hey, folks. Glad you're here today.
I can't believe 2021 is upon us, and 2022, the year of the twos, is ahead of us. We survived.
We survived. It was a tough year, wasn't it? A lot of false starts, I would say.
Tough year, but the markets are at all-time highs. And so, from a trading perspective, from a financial perspective, things are looking good.
Well, and let's remind everybody about what I said last week. So I've got the S&P 500 chart in front of me right now. And you'll notice, just like Sip said, we're at all-time highs and we're kind of stalled here. We did make it above that level of overhead resistance that I was talking about, but now we're seeing some distributions. The scoop is that this week and the week before, we have a lot of investors that have basically left and gone and spent time with their family, leaving behind some folks that have some, I would say, intense beliefs, right? If you're somebody who picks being in front of the computer screen, being in front of the markets over being with your family and having, fun holidays, then you've got to be somewhat of an intense person with intense opinions. And so I've always coined this phrase, Sip. I've said, hey, the market is being controlled by a few intense voices speaking loudly. But what happens is next week, all the regular investors start to come back. They're not hungover anymore or anything like that. And what's going to happen is they're probably going to do some correcting. They're going to see what's happened over the past 2 weeks while they were away. And now they're the ones with the big voice. And so they're the ones who are going to, correct. And we see this every year. We see during the 2 weeks of the winter holidays that things could sometimes go a little crazy. In fact, on my chart, I'm going to change from the SPX to the SPY, which is the ETF, just because I want to show you about volume, because volume, I've always said, is the great validator. Let's see if I can get my cursor up there. There we go. And so press enter. Volume is incredibly low, which tells us that indeed it is few intense voices speaking loudly. I'm not raising alarm bells, but I'm raising notifications here. If you're in any sort of positions that are set to profit if the market is going up, next week, starting Monday, Tuesday, Wednesday, I want you to watch carefully for correcting. I'm not telling you to get out of your long positions. I'm telling you to watch carefully, put in your trailing stops for just in case. I know a lot of people entered into some of our positions, Delta Airlines, Cleveland Cliffs we talked about. We can visit these in detail later. Just be aware your positions are profiting right now and you're getting ready to sell premium, if not just take the profit off the table. But I want you to watch all your positions. Anything that you're long the market, I want you to watch those positions for any possible correction. It doesn't always happen, but it happens often as the new year starts.
Yeah, and this is kind of a unique year, I would say, where we have Christmas Eve was on a Friday. We got New Year's Eve is on a Friday again today. And so this past, even that like Thursday through the end of this week into maybe even Monday, Tuesday, Monday, Tuesday next week, a lot of the real money starts to recalibrate the portfolios, I'm assuming. And then we'll start to dig into more of the signals, the trades, the opportunities that you talk about inside Trading Trader every week. And so so let's go ahead and review the year a little bit, right? So is there anything that happened this year that you think is going to move into the next year? And if so, what are some of these things that we want to keep an eye on that maybe will determine what kind of movement or positions we'll be looking to put on?
Man, 2021 has been the year of the retail investor. I have never seen this much participation by retail investors. That means little guys, right? And I think it has a lot to do with us being trapped at home, being afraid to go out, and being afraid to even socialize. So, what are we doing? Well, we're on e commerce sites and we're buying a lot of shit, right? Which is making the supply chain stressed, right? We hear about that on the news all the time, is that the supply chain is stressed. In fact, they're expanding the capacity of the supply chain to handle all of the e-commerce that's happening, because instead of going out and spending our money at restaurants and on entertainment and shows and movies and all that stuff, we're spending our money on stuff. Now, I hope the powers that be are making this supply chain expansion scalable, so that in the future, when we do have some time to go out and the money that goes for stuff starts to compress, we can then shrink the supply chain, but then expand it again if something like this happens in the future. So that's the first thing that was a big thing this year. Second thing is, again, we've got all this money. We're not spending it at restaurants. We're not spending it on entertainment. We're buying stuff, but we have more money. And so people have been getting into the markets left and right. Crypto has been going crazy. All sorts of stocks have been purchasing. The whole Reddit thing where people are on top of each other in social networks talking about different picks and becoming forces of power in being able to move the market. Typically the retail investor has to follow on the coattails of the big money investors, right? But this year they've been able to, put themselves together in communities and then, go forward. So that's something, you know, it's going to take a while to change. And I think some of these things where retail investors have figured out the games that the big players play, I don't think that's going to go, at least not anytime soon. I mean, of course, we all suffer from amnesia. And as soon as things get back to normal, we'll start, buying big cars and going out to, and forgetting things, but not in the distant future. I feel like this sort of tribalism in the markets is here to stay.
I would probably throw inflation in there because the whole COVID has created a kink in the money supply. Um, but the retail part is very interesting, and I feel like there's a correlation to options trading in that because there's more retail players and they're implementing more, fairly sophisticated strategies that should increase volatility, which bodes well for a lot of the strategies that you're implementing.
Yeah, it definitely does. But I got to tell you, Sip, there's something going on with investors that are at least knocking on my door, on my school door. And, you know, these investors are taking the idea of investing and they're sort of doing step 10 before doing step 1 of learning a new skill. These guys are coming to me, and if it wasn't if it was just a one-off case, that would be something. But in just the past 7 days, I've had over 10 conversations where folks are coming to me and they've borrowed money at a low interest rate in hopes to invest it to get returns at a high interest rate. Now, that's a very risky undertaking. And I would say the only time you can do that is if you've proven success. But these folks, they're borrowing money to get into investing and they don't know how. And it creates a sense of desperation, right? Because now you've got the holding costs of this money. And so it makes people do stupid stuff. And I'm seeing a lot of stupid stuff. And what you want to remember as an investor is that you don't ever want to get into a desperate situation. You don't want to have to invest. You want to be able to invest at your leisure, right? Because then it becomes something that you're not pressed to make trades that are not smart trades. It clouds our thinking.
Yeah, and I feel like these new innovative tools like Robinhood and Webbull, some of the other
Makes it
new,
easy.
yeah, yeah, makes it easy. And when you're not doing your due diligence and you're filling out the account and you're clicking the boxes and you click that box that's the borrow, the leverage, and then you go in, right? These are rookie mistakes, but that's why you're around. That's why we got trading trainers, so people can ask these questions.
Yeah. And I'm even seeing people taking loans off of like credit cards and stuff just to have the cash to invest. And I'm thinking, oh my goodness, the thought of getting rich quick, but investing, it's like a skill. It's like something that think of a physical skill you might take on. Like, say, for instance, you want to get into some sort of exercise class, like weightlifting, right? Well, you don't get in and then immediately go find like a sponsor like Nike, Adidas to give you a whole bunch of money. And then you go and register yourself for a strongman competition without having lifted a weight before, right? You want to start by going into the gym at least once or twice, picking up a barbell and, hiring a coach, making sure the coach is making sure you're not going to do something that's going to break your back, right? It's the same thing. Investing is not something I wish that I had a switch on the wall that if somebody came to me and said, "Hey, here's $500, flick that switch so I can automatically be a good investor." I wish I could accept $500 and flick a switch on my wall that would make that customer automatically a good investor, but that's not how it works. I don't have a blue or a red pill for you to take. I wish I did, but no, you've got to put in the work of, and you've got to have somebody, I call it guided discovery. Have somebody who's done it before you that you can follow in their footsteps and learn it the right way, right? And repetition is key. Start with a paper trading log. Prove to yourself that you can do it, then do it, and then do it again with small amounts. Don't go in swinging your big portfolio of borrowed money because, as many of the folks who have talked to me on the phone this past week, you lose a good portion of it and then you have restless nights.
Yeah, and then there's millions of people all around the world. Anyone that has an internet connection, we're all competing for the same pie. And so for someone that's an investor to be right, most likely there's someone on the other end that has to be wrong, and that's the daily battle.
Dude, you always hear in the headlines, like when there's a little bit of a pullback in the market, you always hear the news, oh, $4 trillion was erased today. No, that's a very misleading headline from the talking heads. The truth of the matter is money is not created or destroyed in the markets. It simply changes hands. And so if there's a more savvy investor out there, like you said, it's likely if you've lost money, somebody else's pockets have gained that money.
Yeah, and that's one of the interesting perspectives to some of your strategies. Something that we've covered in previous episodes, where you mentioned there's 27 different ways to make money using options, and it's not as simple as going up and going down. There's all these other things that can happen that you're trying to profit from. And
Yeah,
so I'm wondering if I think the lessons here are, don't borrow money to trade right off the bat, right? Like, or at least be, aware of what you're doing there. Secondly, start off small, right? Start off with your singles and your doubles. And so I'm wondering if maybe we could go over a few of those trades that we've, called out,
yeah.
this year, where we kind of put those setups into play. Maybe see where they're at, and then it might be safe to assume that these are positions that we're going to look to put on again in the next couple of months.
Absolutely, absolutely. So let's start off with Mattel. That was one of our early ones. This is the toy manufacturer, right? So if I pull up my Mattel, Mattel gave us a perfect opportunity to buy some sort of back month put option. And we did that instead of shorting the stock. And the reason why we wanted to buy the back month put option is because you're buying and you're going long. If you're shorting something, you're having to borrow and you're usually having to have a margin account with your broker. So we like to keep it simple, do a cash trade. So we bought a back month put option just right at the end of November. And then just over the last week, we went ahead and sold some put premium back. So by selling that put premium back, we basically got a credit against our initial purchase, so reducing our break-even price. And with this underlying symbol kind of going against us, against the initial trade, we're creating profit where profit would have otherwise been lost, right? You mentioned something a little earlier, Sip, about it's not just as easy as the stock going up or down. I would actually argue that kind of like predicting whether a stock is going to go up and down is probably one of the most difficult and error-prone exercises that we might do. In reality, if we can have a strategy like what we talk about with premium selling, where it doesn't matter if the stock is going up or down, just so long as the time clock is passing by, because options act like an expiring coupon, right? Where we've issued a coupon and basically collected a premium, like how the Boy Scouts and the Girl Scouts come to your door and they're like, will you buy this book of coupons from me for $10? Well, now the people get to keep the $10, and whether you use the coupon or not, right, they got their $10. So I'm selling a coupon, I get the money, and whether the person who bought my coupon or not uses that coupon is up to them. But usually the way that we time these trades, the coupons don't get used. And if they do get used, we wind up making profit anyway. So that's kind of the idea behind premium selling. And so in our Mattel trade, that's exactly what we did. We sold a put coupon, and we actually bought ourselves a call. Next week, Sip, I'll actually show the trades that we've done to date and where we are with profits. But just giving a general idea, we also bought ourselves a really inexpensive call option with a strike price up here at $23, that just in case Mattel does start to scream higher, we're going to have a hedge against this whole coupon selling thing. If it doesn't scream higher, we'll just sell that protection, that hedge back at a profit when we get a little bit towards another reversal. That's a good thing. In fact, you mind if I go on a quick, like 1 minute tangent? Not that I haven't been on 1 minute tangents all day.
Let's call it the end of the year tangent. How about that?
People are kind of confused about what is a retracement and what is a reversal. So I want to give my point on this, and I'd like people to maybe, at least embrace my definition. A reversal is something that happens to the medium to long trend, right? And so if you have a reversal, that's a big channel change. Like the channel is changing direction on you. If you take a look at Mattel, if we go back a little bit, right now I'm looking at just 6 months. I'm going to go back to looking at 2 years. You can see we have been going kind of at this slanted downward channel for quite a while. And I've got a whole bunch of extra stuff in here. Let me clean this up a little bit in real time. Let's get rid of that. Let's get rid of this and this. I want to get rid of all my drawings, but where you can see the clear reversal is where Mattel was heading up, and then it had a reversal, and now it's been gently trending back down. That's a reversal. A retracement is more of these short duration reversals that go between support and resistance of our new medium to long-term trend. So a retracement is in the medium to long-term trend, and it's just bouncing between support and resistance, whereas a reversal is a whole change of the long-term trend and the long-term channel direction, right? And so we don't we play when we're doing premium selling, we play retracements and then we get out at reversals. So as far as Mattel's going, the retracement happened a little bit higher than we expected, but that's no big deal. Same with the retracement here. But as far as we're concerned, we're still following that same gentle downtrend, almost horizontal, but gentle downtrend. And we're able to sell premium, buy protection, roll it out, repeat, repeat, repeat. We're actually waiting on this trade for January 21st, the third Friday of January, to get our payday. And then we'll look to do it again on Mattel.
And is this like a 2-year time frame that we're looking at here?
Yeah, this is 2 years.
Yeah. So like it ran up quite significantly, I don't know, for like a year, and now it's creating that channel up there.
And now instead of, having a tight channel facing up, it's this wide channel. And honestly, most symbols spend most of their time in this particular pattern. And so if you've got a strategy like our premium selling strategy, most of the time you can trade this. What a lot of investors are doing are looking for that directional strategy, and it's like finding a needle in a haystack, which is a lot of work, a lot of time, and if you don't get it right, it's a lot of risk. Whereas if you go with where these stocks tend to be, which is usually retracing up and down in a bigger channel, that's where stocks usually are, right? It's only every once in a while that a stock, something's in the news, something happens, maybe there's correlation, it'll send the stock on a directional move in one way or another, like Mattel a year ago. But otherwise, if you look at an overall life of a stock and the chart, most of the time stocks spend their time retracing in a very gentle channel. And that's where premium selling is optimized. That's where would you rather trade this strategy where you're constantly looking for needles in a haystack, and when you find a needle, there's a good chance that it's a dud? Or would you rather have a strategy that works almost all the rest of the time? And that's what we focus on here.
It comes back to the boring stocks, right?
Oh,
Boring stocks make this strategy, very, profitable.
that's right. That's absolutely right. Delta Airlines and American Airlines, they're very similar. We've bought our back month option. So we had a choice. We could either buy some stock shares or we could buy the back month option. And we've gone ahead and done that as it's starting to move up. And this is one of those symbols, Delta Airlines and American Airlines. I can bring up that chart as well. This is one of those symbols where we want to watch it next week. We want to make sure that the gains that it has made in the past week or two, that we shouldn't just take our profits and run, but instead, we can wait for it to sell premium. So we want to watch this carefully for any corrections in these airlines. Plus, there's been a lot of stuff in the news, right, about airlines. And
That's what I was just going to say. Not that that affects the strategy, but they just keep canceling flights on everybody, and that's just brutal.
that's brutal. And that's why we want to, if we've got a couple of, when the rest of the investors come back into the game and they look at it and they say, you know what, maybe the airlines are pushed a little high, especially with what's been happening over the holidays, especially with this variant that we still don't have a handle on. Maybe we should start taking some distributions. We need to be prepared. If we see hints of that on Monday, Tuesday, Wednesday, all next week, we should take our distributions too. And don't worry about selling premium. But I'm not saying get rid of your positions today. I'm saying let's watch carefully at the beginning of next week. Get on our toes.
Are there any other airlines that also you ever keep an eye on, or Delta and American kind of the two that you like to get into?
I like airlines. The other one that the other two that I've been looking at is Delta Airline. JetBlue and United Airlines. I've watched all the airlines. The only one that fell off of our list is Southwest. They've got their own thing going on. They've become too volatile. They're too much in the news with some of the business decisions they make. And volatility is not our friend when it comes to selling premium, at least not what we call time decay or theta decay optimized premium. But yeah, we'll stay away from Southwest, but JetBlue, United, Delta, American, these are all ones that I've been selling premium against for the last 13 years.
Yeah, and I was traveling last week and fortunate enough not to have any delays or have to deal with that. So, the majority
Where's
of people are
wood?
getting. Yeah,
I'm
right.
knocking on wood over here. Yeah.
Well, my traveling is over for the year, at least for the holidays. So I'm feeling good about that. Let's talk about the other boring one, Cleveland Cliffs. Right, that's one that we went into a little bit, and then I think last week we went over Ruth Steak as well.
Ruth. Yeah. Cleveland Cliffs is one that a lot of people are profiting on right now. I don't suspect that Cleveland Cliffs is going to have any sort of correction, but correlation, we've talked about correlation in previous calls. Correlation is high, so it could correct just because the market corrects. But Cleveland Cliffs is doing really well. We're waiting for our opportunity to sell premium against the stock that we purchased on Cleveland Cliffs. So Cleveland Cliffs is on its way up. Again, we are going to watch it next week, look for any sort of possibility of pullback, but Cleveland Cliffs looks really, really promising. A lot of our folks are in some Cleveland Cliff trades, and we're just really happy about our appreciation to date.
I never even heard of Cleveland Cliffs until we talked about it here.
Boring.
We have a question, AJ, that I think you might be able to clarify here. Do you see it?
I see it, but for some reason it's mirrored. What does it say?
So I realize I missed something in your discussion of channels. Do you make channels display on the chart using Fibonacci, Kelter, or some other channel technique?
That's great. Great question. So we're trading ideally horizontal positions, and you'll notice I'm using my Fibonacci's, and I've modified my Fibonacci retracement scale so that not only is it the typical Fibonacci, which is 0, 23.6%, 38.2%, 50%, 61.8%, 78.6%, and 100%. But I've actually continued the pattern for 2 stages in either direction. So you can see here, I went to another 23.6, 38.2, 23.6, 38.2. I've also color coded it so that I know exactly where my support and resistance is. You can see I made that a different color, in my case, red versus green, and I made those lines thicker. I also color coded the center zone from 38.2 to 61.8%. You can see that I've made those magenta and made those a little thicker. So what you can see here is I place the support and resistance lines where I've got multiple tests of that level. So I'm not going to outliers. A lot of folks go to outliers. I'm not going to outliers. I'm putting support where I've got as many tests as possible. By the way, for those of you that use point and figure charts, there's a good way to validate that using your point and figure charts. Point and figure charts are the bomb. Same with resistance. And then you'll notice that I've got my center zone outlined and I've got my retracements. Now, why did I go 2 retracements in either direction? That's because if you look at these channels, if they've been identified well, when an underlying symbol passes 2 Fibonacci retracements outside of the identified channel, you're getting into that reversal status versus your retracement status, right? In fact, statistically, the probabilities of something retracing after it's gone 2 Fibonacci levels outside of the channel, it goes down exponentially. And so I always like to know when my underlying symbol has popped out of the Fibonacci's by 2 levels, because then I'm saying to myself, hey, I might be seeing a reversal versus a retracement, and I need to do some sort of defensive adjustment strategy to my premium selling position. Now, like we saw with Mattel, Mattel has a slight channel. So with this type of channel, I've drawn a linear regression line starting at where the reversal is, and I've identified what the medium to long-term channel is, and I've drawn parallel lines to that linear regression line, and I've placed them. I just spit when I said that. I spit all over my screen, so I said it, and I asked for the news, but I got the weather. I went ahead and copied that parallel line to where, again, I've seen the most tests of that, in this case, descending level of resistance and descending level of support. Now I can place my Fibonacci's right along those lines. I can draw right from support to resistance. And now, right, because when you sell options, the strike price doesn't change. So for that month, or we like to target 3 to 5 weeks, so you could use weekly options, but in that 20 to 30 day period, you're focusing on a set sideways movement. So that's why you can see here my Fibonacci's, I can stretch them to be about the length from expiration to expiration, which I'm going to do right now for you. And I can every month adjust what Fibonacci's I'm using based on where that channel is used. So I don't use Keltner. I like quantitative analysis. I'm going to go where the tests of support and resistance are. I'm just going to move parallel lines off. If I've got a horizontal channel, I can use the fibs just the way they are.
We've got another question that just came in, AJ, and this is one that I think gets asked a lot, and that is, how big of an account do I need to join your program and follow your trades?
Well, we're talking about options trading here. And options trading, all the option contracts are in lots of 100. So even though options are fairly inexpensive, you have to buy them in lots of 100. Now, I've seen people in my program specifically sell premium in as little of a portfolio as $800, but they are limited to just the cheapest underlying symbols, right? Because the option price is usually a percentage of the underlying symbol. So if the underlying symbol is cheap, so is the option price. So they're limited by a certain, set of symbols. They can't have all the symbols. Even the ones that are performing the best might be out of their reach. It tends that when the portfolio size gets to about $4,000, $5,000, now you have access to a whole bunch of underlying symbols. You have more access to available trades, and you can really start growing your portfolio because you don't have to pick and choose and find those underlying symbols in your price range. Now, a lot of things are in your price range. And interestingly enough, you can see some real acceleration from about a $4,000 to $5,000 portfolio all the way up to a $250,000 portfolio. It can happen very quickly. In fact, that's what happened to me personally. But then at a $250,000, you start to see again that limitation. This time it's not because you can't afford it. It's because now you start to have liquidity problems, right? Because at a $250,000, you could wind up buying so many or selling so many options. You're the only person buying and selling in the marketplace, and that's not a good position to be in. So you have to start analyzing your symbols for liquidity to make sure there's enough player. And so that limits the symbols. This time you're not limiting it because of the lower price. You're limiting it because only some of the option symbols have a lot of liquidity. So there's this sweet spot between about 4,000 and 250,000. But like I said, you can start with as little as 800. And then, we've got people and myself, we've got 8-figure portfolios, and you're still doing it. But just know the sweet spot is in their zone. So, right now you might have the problem that you've got the smaller portfolio. No problem. It'll get into that sweet spot. And before you know it, your problem is going to be the bigger portfolio. You're going to have too big of a portfolio like I do.
Yeah, and that's one of the benefits of options, of trading options, is you don't need to put up the 100% that you would if you bought the stocks outright. So it does give you a little bit more value in your dollar to take these moves.
And I got to say as well, One of the beautiful things about the markets is that we have simulators, right? All the brokers offer simulators. You can even get some offline, like non-broker sponsored simulators, right? This is where you can like give yourself $10,000, $20,000 and you can see how it works, right? You can do it. You can learn by doing. Trial and error, guided discovery is even better. It's a faster solution. You know, real estate, uh, buying and selling artworks, classic cars, all of this stuff, there's no place to practice. With what we have that's so awesome is we can practice till we're blue in the face, right? And so I recommend, even if you're not somebody who has a big portfolio yet, practice, because this is a skill and you want to be ready for when you do have the big portfolio. You want to be all practiced up so you know what you're doing, so you can get into the big leagues quick.
And that's, I think that's a great goal for any new investor or anyone watching for 2022, right? Get that mindset right. If you're not investing, there's never been a better time to start investing, right? Develop your strategies, figure out what will work for your portfolio size, and get involved with a program where there's a group of people, such as the trading trader mastermind sessions, where you're discussing ideas, where you're getting validation, where you're throwing ideas out and then starting to develop your own that maybe benefits others.
Yeah, that's right. Uh, we wanted to cover Ruth.
Yeah, let's
So
just do,
here it is. I'm going to zoom in a little bit. I'm going to zoom into maybe just the most recent 6 months. We're evaluating this retracement, whether this reversal here at this level of resistance is for real or if it was like the one about 2 weeks ago. If it turns out to be for real, what we're going to do again is look if there's an opportunity to sell, a back month put option. Not sell it, I'm sorry, buy it. Because we need to have something to cover. When we sell premium, we need to have something to cover ourselves, right? Whenever you sell premium, you have put yourself, in order to collect that money, that coupon, you have to have the ability to honor that coupon. It's called being able to cover the coupon. Should the person who buys it from you, who gives you a little bit of cash, should that person actually, use the coupon? It's called exercising the coupon. So you need to be able to cover that. So like when you sell a call option, to cover a call option, you have to have some stock or something that can be translated into stock. In other words, if somebody calls you out, they're using their coupon to take your stock and they're going to give you whatever the strike price of that option was in cash. With a put option, it's the opposite. They want to put their stock to you and have you give them the cash. So you either have to have a whole bunch of cash or you have to have a way to accept their stock and get some cash, or there has to be a way to cover it. You always have to cover it, otherwise you're going naked, and that's a very risky thing to do, is going naked.
So in next week's show, let's keep an eye on Ruth again, because it does look like there is a setup there, and
Yeah,
I know some of the viewers will want to see that. If anybody's watching for the first time and you're wanting to learn more about AJ strategies, we just put the link to the daily webinar there. Go ahead and set aside 30-45 minutes to watch that, to really understand the strategy, and maybe that'll better prepare you for the next show where we're going over some of these setups in more detail. Um,
absolutely.
as always, we appreciate all the followers and all the viewers. Feel free to hit that subscribe button, that notification button. We are doing our best to do at least one live show a week. Bring your ticker symbols. We like to do these little rapid fires where AJ gives his insights. We do have another question that just came in, and I think this will be the last question. The last question of
Last question of
2021.
2021.
Okay, let's see. And I think we've had this one before, but we'll go ahead and review it again. How far out? How far do you go out usually to buy back month options?
Ah. So a lot of people think that it has to do with minimizing the amount of time decay or theta decay that happens to the price. And that's not the case at all. The way we mitigate that theta decay is by going deep in the money. So make sure when you buy your back month option, you buy it very deep in the money. In fact, we like to target having a premium component of price being less than 5%. That's a very deep in the money option, and that's going to mitigate any sort of effect on the price by time passing by. But then you still have an expiration date. Now, statistically, people in my program, and I've been monitoring them since we started this program in 2007, their positions last on average 5 months, right? And that's a very shallow bell curve, meaning that many of the positions last as many as 6, 7, 8 months. Some of them only last 3, 2, some of them only last 1 month. But the scoop is you want to make sure that back month option is getting exercised by you and not expiring, right? Because if it expires, you're leaving money on the table. There could be additional months out there that you could be selling premium and you're not able to take advantage of it because your back month option expired. So if you look at how long these trades last and say, hey, I want to at least go out far enough so that I can get as many of these positions and collect as much income against that covered position. We tell people at least 8 months, if not more. And so right now, a lot of us, most of the options that are that far out are the January 2023 leap. So we're focusing a lot on the January 2023 leap. Some of the busier symbols have maybe a September option. So go with the September option if there's liquidity.
Liquidity, key component in a lot of these decisions.
That's one thing with options, not being as popular as stocks, and also because the liquidity is generated by you and I, and not by like a company or an ETF offering or an index. The exchanges. Since we're the ones creating the liquidity, it becomes a factor. It's something you just have to evaluate.
Awesome. Well, do you have any fun New Year's Eve's plans in the works this evening?
Well, you might notice that my scene has changed. We have taken we're not hanging around DC. We are at our home in South Carolina on the beach. So I think we're going to spend some time on the beach for the weekend.
Awesome. And so you're going to be ringing in 3 hours ahead of me. I think they're already ringing it in Australia and those Pacific countries.
Yeah. Yeah. Yeah, it's 15 minutes until some of those yeah, absolutely.
So happy New Year to anybody out there that's watching, celebrating, watching the live stream for the countdown. I wanted to ask if there are any wise words that you wanted to leave the audience with as we close out the year, go into the new year.
Yeah, I think that the words I'd like you to remember going into 2022 is pick something to learn and then stick with it. It's very easy to succumb to shiny object syndrome, especially right now where, there's a market for education. And so, a lot of people are thriving for education, but it's easy to get distracted by shiny objects. So the people who are writing the marketing, pick something you like. If it's crypto, it's crypto. If it's options like what I do, it's options. If it's Forex, not only pick something you like, but also pick something that matches your lifestyle, right? If you're not somebody who can stay in front of the screen at like 1 a.m. in the morning, then Forex is not for you, right? Because there's that special hour and it's usually midnight to 1 a.m. and you have to be awake and you have to be cognizant. So not only evaluate what you think you might like, and not only what you think is the most lucrative, but also what fits your lifestyle, and then do a deep dive on it. Don't try to jump ahead. Realize you're building a skill in 2022. And that means you have to do repetition. You have to get good at this. You can't just flick a switch. This is one of those exercises where you need to practice. Practice, practice, practice. And if you pick something like we do in options, get yourself a free simulator account. Practice on paper. Practice till you're good at it. Don't go out borrowing money in 2022 without first being good at what you're doing.
Love it. Love it. I think the energy is going to set us right in 2022. Looking forward to seeing all these new opportunities present themselves. Excited to be learning from you every episode. I am not a guru options trader, but I feel like, these lessons are definitely helping me become an options trader, even though personally I'm a big fan of the crypto too. I know that you are as well. But that we'll leave that for another episode.
Yeah, we could definitely touch on that.
Yeah. So with that, I think someone just left a comment that I think would be a great way to end the year. Let's stay positive and test negative.
Yeah, I like it. Stay positive, test negative.
All right, everyone. Enjoy the rest of your 2021. We will see you in 2022.
Happy New Year.